Hello and welcome to another Forex Friday.
My man!
Let's just jump into it. So we got the electric guitar mouse today because we're ready to shred. Woo! So I'm going to start off with the DXY and the trade-weighted dollar index that I keep talking about. And if you're tired of it, sorry. As long as people keep talking about the DXY, I'm going to be talking about this one because it's honestly more important in my opinion. It's more accurate representation of the dollar. So as you can see, we still have not reached the peak from back in July.
Not crazy.
And that is despite the DXY well surpassing the peak. And that's just a sign of euro weakness. But I personally want to keep track of this because this is going to be a more accurate representation of where the dollar is really headed because it's incorporating a lot more currencies. It's not just 60% euro like the DXY. So if you want to look at the overall trend of the dollar, I would definitely recommend checking this out. Actually, I can widen this up.
That's what she said.
You can see the ticker. I don't know what the hell this ticker name is. It's kind of crazy. Dollar trade weighted index. You can see the letters right there. I'm not going to say that. It's like the alphabet. But yeah, so we're going to look at that just for comparison. I don't want to get too much into it just because I talk about the DXY all the time. But I want to keep stressing this for anyone who doesn't know because it really is a huge difference. Because you might as well just be looking at Euro USD when you're looking at, like the inverse, obviously, when you're looking at the DXY. So if you want a deeper understanding of where the dollar is headed, if there is really this underlying strength that isn't strictly related to Euro weakness, highly recommend looking at this one. Because this level right here that we'll be watching will be definitely significant because if we can pass this level in the trade weighted index around 124, then you got open seas ahead. And we had a small retracement right now. Hard to say. It could be just because the dollar's been on such a tear. And when you look at this, it's been absolutely ridiculous. And a big part of that naturally is the euro because even in this trade weighted index, the euro is like 17 or 18% of the trade weighted index.
You're a fucking idiot.
But yeah, that's all I really wanted to say. I don't want to touch on the DXY too much. I mean, we all know trend is up. Don't fight it. I might be looking for a pullback into this level right here around the previous high. So maybe like 108 or something. Have a small retracement. Not looking for anything too crazy. I wouldn't be expecting it to come all the way down here, although that's definitely possible. I do have this level mapped out, obviously, just in case. But I think that it's going to be the pain trade of a slow grind up for the dollar, and you're probably not going to see excessively large retracements. I mean, just down here, maybe into this general area, and then continuation. That's probably what I'm expecting, base case. But let's go ahead and transition to Euro USD. Okay, so it's the daily chart. Obviously, we had a pretty aggressive downtrend where we broke parity again, and right now we are still below dollar parity. That's going to be a huge psychological level. You can tell right here where this candle body was. Actually, where we are right now. We're kind of fighting it right now. We had this wick up, and we've been pushed down below parity. So, definitely a lot of liquidity entering the market in this area. Let's drop down to the 4-hour. All right, so I'm only talking about the euro just because it's, the biggest pair and pretty significant, has had some pretty significant movements as of late. But in terms of the price action, it's pretty choppy. Not anything I'm super interested in. I personally would love to see let me get this up here. See a return back into this area right here. Maybe even pull liquidity from above. I think I talked about this before. I would love to see the euro get a little bit of a rally, possibly even break this high to grab liquidity before heading down to make a new low, possibly even into the 80 handle territory. But we'll see. I don't know if I see the euro having that much strength going forward. We could see a little bit of a retracement, at least to bust these highs right around here. But yeah, I would still be watching this level in general, just because this is where we had this large impulse. Maybe go up one higher time frame. So obviously you have this huge impulse right here, a lot of imbalance in the market in this general area. We kind of filled it here, but still a lot to be filled.
That's what she said.
So I would be looking for some sort of retracement into this level, and then maybe looking for some weakness. I guess you could just short it right out from there, but I would definitely be looking for some sort of weakness, because I wouldn't be surprised if you saw a little bit of a push just to really kind of fuck people and grab the liquidity from all in this area. I don't expect it ever to get, well, not ever, but I don't expect it to get up to this high anytime soon. So this general area is where I'd be looking for potential pivots. But like I said, I don't think it necessarily has the strength to get there. If I had to guess, we'll probably see some fair amount of chop, unless there's some major catalyst that comes out that sends it one way or the other. But yeah, those are my thoughts. Got it?
Yep.
Nothing crazy, just had to touch on it. So USD JPY. Okay. So it's another one of those kind of slow grind pain trades. The USD JPY has been very hard to catch pullbacks. Like, it pretty much has these rallies and then a minor consolidation, another rally, barely pulls back at all, and then another rally, barely pulls back, and it just keeps going like that until, you know, you just never enter the trade. And again, this is kind of like the euro, where I don't really have any strong opinions. I'm just including it just because it is one of the big pairs, and there's a lot going on in the macro right now that's leading to this crazy appreciation. For those who don't know, the correlation, actually I'll put this up. Let me get the line first. So when you were trading USD JPY, you were basically trading US interest rates. So if you add the US 10-year as an example, I mean, look at the correlation. It's almost perfect. And there's a lot of reasons for that. One of them has to do with interest rate differentials, just because the United States is raising rates right now, and the Bank of Japan has pinned their rates at 25 basis points. So any change in rates is entirely on the US side, meaning when the US raises rates, you know, people want to sell yen to go buy US treasuries to get that yield, because they aren't getting yield in Japan. And similarly, when the US, or when Japan is trying to bolster the yuan, they will sell their reserves to buy yuan. So it will work in the opposite direction, because if they sell dollar reserves, that puts downward pressure on the dollar and upward pressure on the yen. Anyway, it gets hit from both sides. Not really going to get into that today. Actually, let me get rid of this now. I don't need this stupid orange. Get out of here. Okay. So areas of interest, I suppose you could be looking at this area for a pullback. Possibly where this original higher high was, that it busted through. Potentially see a pullback to retest, because a lot of times when you enter a new range, you come back in, you retest it, dip below, and then I would want to see some sort of clear above, and then you get in on the retest. So this is the 8-hour chart. I would want to see at least an 8-hour close above this higher high that it busted through, after having dipped below. So it's basically the market confirming that it would be willing to continue the trend, which is probably going to happen. So dip below, kind of retest this previous range that it's now left by busting that high, break below it, and then have a candle push up and close. And I'm not talking about a 5-minute candle or even a 1-hour candle. You want to see a meaningful close above this level, and then probably try to hop in on a pullback. Actually, let me get this. So it'll be something like this. And the difficult part with trades like this is you don't really have a reasonable target, just because there isn't any price action, at least in the, I mean, you can probably go way back to find price action where it lines up, and maybe that'll be helpful, but it's so far back that realistically you just kind of have to, you're like operating in no man's land. It's kind of free territory. So having a target is difficult. I would just, I guess, base it off your risk to reward, like I usually try to do at least 3. So wherever your stop ends up being, just move your target accordingly.
Totally.
But I would be looking for something like this, and I wouldn't just enter right away, just because you never know if it's going to retrace all the way back down into this level, this zone. Totally possible, especially because you got a lot of liquidity built up here. So I wouldn't be surprised if we see a retracement into this zone before continuing. So that's why I would want to see how it reacts to this level first. If it comes down, holds below and then pushes back up, has a candle close above this level, and then you try to enter with this kind of order right now. And again, not financial advice.
Right.
But yeah, something like that, and then target. But I guess like I kind of mentioned, I would also be interested in taking along from this level just because of this liquidity that we have built up here. And this is kind of a previous range too, a zone where we had an impulse up, and this imbalance between, right, let me zoom in a little bit. So you got this imbalance right here, basically, right? This little box kind of got a gap that could be filled. I would like to see price come back down into this area right here and then push higher. So those are the areas of interest for USD JPY at the moment, but it is kind of a slow grind pain trade. I've been saying for a long time that the USD JPY trade is really just a macro trade. I mean, obviously you can have some sort of edge in there by trading in a day-to-day sense, but it's a macro trade for sure, right?
Yep.
Okay, transitioning. Let's get to some real shit. Okay, so this is the Swiss franc, and what is this? The yen. So I like this one just because you got a classic consolidation area right here, right? So we had this impulse, we have a consolidation, and then another large impulse, and we built up liquidity, right? So we pushed up. Let me get my drawing tool out. So we pushed up here, right? And we established a little bit of a low, and we've been making higher highs since, but building up this kind of ascending level of liquidity. And I like this because it lines up with this zone pretty well, because I've seen this a lot. Not this is a guarantee, obviously. Nothing is in trading. It's all probabilities.
Nice.
But I would be looking for some sort of retracement into this level. So basically break through these lows to bust liquidity, grab those stops, and then pull liquidity, capture any leftover liquidity from this demand zone that it hasn't really retested since it left, and then a continuation of the trend up to a new higher high. So pretty basic, nothing too crazy. Good trading kind of is. If you overcomplicate things, you're overcomplicating it. Don't think too hard about it. I think that can be a problem with a lot of trading. Just the moral of the story with any trading is, where is the liquidity? That is the biggest concern, because that is where money flows in. It's all about flows and liquidity. So if you find where the liquidity is, where the orders are, where price is going to gravitate to, and likely find liquidity, be met by a wall of liquidity one way or the other, and then get pushed into some direction, that is the key. Obviously easier said than done, but you just want to simplify it. Like, what ultimately are you really trying to do with your trading? You're trying to find where the liquidity is, right? Okay. So yeah, looking for a retracement into this level right here, into this zone. Who knows if that will happen or anytime soon, but that is what I'd be looking at for the Swiss franc and Japanese yen.
Yep.
All right, next pair. Okay, so I think a lot of pairs are actually going to be similar in structure to that one I just went over. This is CAD JPY. So another similar thing, and you can actually see it happen previously right over here. So this is a good reference. So we had this impulse, right? We built liquidity, and again, like the last one, this is really, really similar in structure. So you have this huge impulse, right? A lot of imbalance in here. You built up this ascending liquidity, and then what did price do? It dropped, broke through this low right here to grab liquidity, kind of fill this imbalance. Didn't go all the way.
That's what she said.
But it did go far enough, right? It went into the zone, at least captured some of this imbalance, this liquidity, and then it pushed higher. So it can be tricky sometimes when you have these large impulses, like where exactly is price going to fall into that imbalance, especially when you have such a large range. Usually I will, did you guys see that? That was crazy. So usually I would do something like the middle. So where's the imbalance, right? You got like here, and I don't think it would have worked for this trade, but as a general rule of thumb, it's like, what's the imbalance? So you can call this kind of the fair value gap, right? So maybe enter around here. And like I said, it wouldn't have worked out for this trade, but when you have a very large imbalance or large impulse that you're expecting price to fill, you sometimes you miss them, sometimes you don't. It just really depends, but as a general rule of thumb, you can use that midway point as a good guide. I would say it's helpful more than it isn't, because it will help you get a lot of trades, but it'll also help you not get stopped out of trades because you're entering too high. But yeah, so basically looking for the same thing to happen again. You know, price surprisingly repeats itself, even if it doesn't always look like that. So you got this impulse, right? Ascending liquidity, broke it, captured that liquidity, and continued higher to make a new high right here. And we're kind of doing the same thing. It's a little bit different. It's like a steeper ascension, but I still would be looking to enter on some sort of retracement into this level. You could have your, actually, let me get rid of that. So I would have my stop. I mean, you could just given the risk to reward for this, you definitely, so new high, right? You want to target a new higher high because that is the structure, right? We are in an uptrend, especially if we break this high, then we'd be looking for another lower low, I mean a higher low in off of this level maybe. So say we bust through this level and then we kind of come back down. I would still be eyeing this level. Doesn't really matter. Even if it didn't bust that high and it still came down here, I would still be interested in this level. And stop loss to really, whoa, that's not what I was looking for. Let me just use this actually. So you could, I'm not sure the risk reward would be, yeah, it'd be fine. That's pretty decent. Yeah, so true invalidation level is this low right here, right? And presumably it would probably stop within this area, if I had to guess, somewhere within this yellow zone. And then again, targeting a higher high. So risk to reward 3.5, pretty decent. Pretty far away from that level, so don't hold your breath. But yeah, I would be looking for some type of retracement into this level to capture that liquidity, bust through this liquidity, this kind of ascending line of liquidity, bust through that, and get into that zone. Totally, right?
Yep.
Okay, let's go ahead and transition. What we got next? I think it's the GJ. Yeah, so a lot of these are going to look the same, and probably because most of these are yen pairs. But yeah, whatever. Call it the theme of the day.
My man!
So again, this is super similar to the last one. We had this low right here, huge impulse. We had ascending liquidity, or relative, you know, like kind of like almost equal, right? Almost like a flat line, not quite, but ascending. Either way, we busted through that to fill this imbalance, dipped really perfectly into this imbalance, especially if you base it off of the actual gap. So from here to here, right? This was the gap. Look at that, touched that perfectly, right? So that would have been a perfect idea, or I mean a perfect opportunity to, well, I guess, let me see what the halfway would be. So, I mean, this is a very low level, so I guess it wouldn't exactly be perfect, but you know, when you have these large fair value gaps that you're looking for price to fill, I mean, even if you entered right here, your stop somewhere down here, it wouldn't be terrible, but yeah, so you get the idea, right? You got this impulse, and you establish these lows to kind of trick retail into putting their stops like right here and be targeting highs, and then price breaks through it to grab all that liquidity and the extra liquidity that's left over in this demand zone, and then push higher. This one didn't make a new high, which is potentially concerning, just because it shows that this maybe isn't that strong of a demand, especially considering how many times we've entered this level and still not pushed higher. So we're really taking all the liquidity out of this area. I mean, it's possible we drop a little bit lower, just down here or into here, and then push higher, but just given the weakness that I'm seeing, I am a little bit more hesitant to take this trade, just because usually for something like after this right here, when price captures liquidity from this previous low, you want it to make a higher high, because that at least shows that the structure is intact and that we are maybe going to make another higher high going forward. So if it like busted here and then came back down into this level, I would say that your conviction could be higher that it's going to continue and make another higher high. But obviously that's not exactly what's happening right here. So we'll see how it develops. I don't know if I would take, I'm going to have this order here, not placed or anything, but I just have this here as a reference. Yeah, so like I said, conviction not super high, but you can still see the structure that I'm talking about, and hopefully be able to apply this to future trades. Okay, so let's see, what's the next one on the list? NZD JPY. Got a lot of Japanese pairs today. and they all look the same. But hopefully that'll help you internalize this pattern and be able to apply that to your own trades to make that motherfucking money. Okay, anyway. So, yeah, what do we have here? Kind of classic, right? So we have this low, impulse higher. This is a little bit messier, so, and that's how price is. You know, it's not always perfectly neat, so you kind of have to adapt. But, so we have this impulse, right? We had a retracement, and we had lows right here with ascending-ish liquidity. And so what I would be looking for is some sort of retracement into this zone to bust through these lows, right? Sound like a broken record. To bust through these lows, this one in particular, and capture liquidity from this area right here. Because this is, so because we had this impulse and we came back, the market got to, consolidate or kind of think about it and then pushed higher to a new high. So this is the area of interest that we are looking at right now. And I love how well it aligns with this retail liquidity right here. So would be looking for some sort of retracement into this level for a continuation to a new higher high. Right?
That was easy.
We're getting the hang of it, guys. We're getting the hang of it. Okay, let me get some messy. Get rid of this nonsense. All right, yeah. So we pretty much hammered this to death. Hopefully we get to, what is the next pair? All right, this one's a little different. I'm not even sure why I included this, but we'll find out together, guys.
Totally.
Okay. So this is, let me go to the daily, get some more context. So this is USD and Swiss franc. USD and chef. Okay, so got the structure is obviously bullish. I mean, we've been on a major uptrend. Pretty much every dollar pair is bullish. The macro is on its side. So we had this. Where's my drawing tool? Okay, so we have a high, right? Made a low, a lower high, lower low, lower high, lower low, and now we are right in this area right here where it would be kind of make or break, right, for breaking structure, because we broke or continued the structure, right, by making a lower low here, and now we're retracing, and this would be the previous lower high that if we were going to continue structure, we would presumably continue down this way. Now, this is a counter trend, right? So even though this structure, like this is consistent with this, I guess, shorter, lower time frame structure, the higher time frame is still bullish. So this can be tricky because obviously this is a pretty long downtrend. You know, even though this is the overall trend is up, this is, this has been on in a downtrend for a pretty long time. Now, you can have your own opinions about where the dollar's headed. I do think it's going to be going higher. Now, against the Swiss franc specifically, I don't think it will have as much strength relative to others, just because the Swiss franc is historically more of a safe haven asset than our currency, than something like, the British pound or whatever. Also, I don't think Switzerland is really suffering the same kind of inflation that a lot of these other countries are. So they're probably not gonna, their currency probably isn't gonna struggle nearly as much as something like the pound or the euro.
Little bitch.
But anyway, back to it. So this is, let me get this zone out. So this area right here is definitely a possibility for a pivot if it was consistent with structure. Now, something tells me that we are probably going to bust through that. Even if we get a small retracement, I still think we're probably going to be headed higher. Like if I had to guess, I would say this is going to be the low for a while. Now it's possible that we retrace down somewhere into here, but I would expect a higher low at some point to be put in before a continuation. Now this is kind of no man's land. Now you could sell. I wouldn't be surprised if we get a little retracement into this level. I mean, just looking at this is definitely kind of a level I'd be looking out for. And then this right here with the W is a weekly level. I'm not sure. Oh yeah, for basically based off this. So you'd want to see it continue to hold this level, right? Otherwise, we could easily see a gap down, even down to this level. You kind of want to look at this through ranges. So, we busted through this level, right? And now we're operating in this kind of general area. You could even call it this range, right? So we got a range there. And then another range kind of right there. And so this is what you would expect price to kind of operate within. So now that we cleared this level, you would expect some consolidation or maybe even a push up to this level. And if we came down and broke, why is this like locked? What the hell's going on here? Interesting. Yeah, so we would expect. Go down a little. Yeah, so if it came back and closed below this level, you might expect a return down to this area right here before gathering support and continuing back to this high or this kind of range or even up here. But this isn't exactly, I mean, this is definition of no man's land. It's like in the middle of this supply zone, potential supply zone. Now, like I said, you could be taking sells just because it looks like it maybe is going to have a small retracement off of this previous high, and that would be consistent with the counter trend structure. You know, this right here, right? Maybe heading lower and then eventually putting in that higher low right here, just because I do think the dollar is going to gain against the Swiss franc. So something like that. But yeah, I would be looking at kind of these weekly, daily ranges to see how it reacts to, because weekly closes are very important. Like if you see, I mean, you'll definitely almost always see price react pretty strongly to very defined weekly levels like this. Now you can move this around a little bit depending on, you know, which candle you favor. I just have it on this one just because it was the sell candle, but yeah, so I would want to see it hold this level. If it could hold this level, consolidate a little bit, maybe not necessarily a weak close, but see a retracement down to here and then a hold of this level, you know, continue to consolidate maybe, and then push higher. That is what I would, that's my base case probably, even though that is against the counter trend. But yeah, I don't know. All right, I'm over talking about this pair. Let's move on. Okay, so what is this? USD CNH. So this is the yuan or renminbi, dollar. Now you can see that we had this kind of like classic retail bull flag, actually. That would have worked out well if you actually trade that retail trade. But yeah, so we have this high right here. This is, call this the range, right? This is the previous range high, and what would be assumed now to be, let me get this blur out of here. What would be assumed to be this range low. So at some point, I would be expecting some sort of retracement down into this level to retest this previous range and then continue higher to the top of whatever this range ends up being, which could be right here. Now, again, just given the macro environment and how strong the dollar is, and with China actually transitioning more to easing policy while the Fed continues to tighten, it could be a difficult environment for the yuan to strengthen meaningfully against the dollar. That doesn't mean we can't get back into this level. Like I said, this is what I'd be looking at. But just depending on how, you know, just the forces that are keeping that, or, you know, USD strong relative to the yuan, it's very possible. Get the hell out of here. Very possible that we could just trace into this level, this kind of consolidation demand area before continuing higher. I don't like this level as much, you know, conviction-wise for a trade. Well, actually, this is the daily chart, so I'd have to look lower. But yeah, I would love to see a retracement down into this level. I would definitely be interested in taking buys, hence this order right here. And it lines up nicely with this daily demand. So you can see that we have this clear imbalance right here, right? So from here, this fair value gap to there, I would love to see this imbalance filled, and it lines up pretty perfectly with the previous range high. So would love to see that, but let's actually drop down to a lower time frame. Yeah, so I mean, kind of the same thing. I actually wouldn't, I'm not hating this right now. This level on the 4-hour, could totally see price retrace down into here. I generally like to, on these more call it skeptical plays. Where the hell is the top of this? Okay, so right, we're targeting a new higher high. That's what we would expect, right? So an invalidation below the bottom of the zone, a little tricky with these wicks, but I would say, I mean, you can base it off these candle bodies probably, but I like to have at least 3. So this is probably what I'd be looking at entry around the midpoint of the zone, not entering the top, just because I think could fall pretty quickly. And the risk to reward wouldn't really make that much sense too if you tried to maintain the same invalidation level to stop while having your entry up here. I mean, who's trying to take a 1.6 risk to reward?
For real? You fuck with that?
Not me. Right, so we got the 3, and it lines up perfectly with the midpoint of this the zone. So on a slightly lower time frame is the 4 hour. I would be maybe interested in taking this long up to this newer high. I think this is a good level to watch. But if it breaks this level, next level is definitely down here that I'd be looking at. But both very reasonable trade ideas. Okay, so that is that. Let's transition to, what is this, Euro? Oh, we got another yen pair. Where the hell is it? Euro JPY. Okay, so we actually are in kind of supply zone right now. Let me get back to the daily and then work our way down.
That's what she said.
Okay. So another one that you can tell, clear uptrend. Now longer term, I do think that the yen is going to appreciate relative to the euro, just because I think Europe is in a worse situation. And I actually heard Weston Nakamura from Real Vision. He was talking about this a lot, how the euro yen pair right now is a great way to hedge the energy energy risk, right? Because both of them are pretty much in a similar boat with regard to energy. Like, they're both extreme energy importers, and so the energy inflation right now is affecting them. Maybe not exactly to the same extent, but it's affecting them in the same way. Just because, I mean, Japan is like almost 100% energy importer. It's pretty ridiculous how much energy they have to import, so it's affecting them a lot. And we all know about Europe having to deal with this problem right now. So regardless of that, whether or not that situation worsens or improves, it'll kind of affect the currencies the same. So basically, it's just kind of like a relative trade. It's like, who do you think the energy crisis is going to affect more, Europe or Japan? And so in that sense, I think that Europe is in a worse situation than Japan, especially because Japan at least is like a slightly healthier, economy surplus-wise, although not quite. I don't know. It is tricky, but I think the energy part of this is the biggest thing to focus on. So, and again, this is macro, and I don't want to conflate too much of the macro with the micro, because that can get problematic when you're trying to day trade. It can really distract you.
Totally.
But I still think that's an important thing to keep in mind. So right now you can see we had, let's just get back to the micro, right?
My man.
Okay, so we have, there we go. Yeah, so we have these highs right here, a low, a lower high, a lower low. And so consistent with this counter trend, because we have been in more of an uptrend, right? So this is a counter trend. Consistent with the counter trend, this level right here would be a decent level to take a sell. I actually might be in this trade right now. I have to double check. I know I should probably know that, right?
Totally.
Yeah. So yeah, this level right here would be consistent with the counter trend, and based off of that, we would expect to make a lower low, right, to this level, hence this target. But since we are in a larger or a higher time frame, this is pretty. Let me zoom out a little bit. Yeah, so you can tell clear uptrend, right? And here, where would be the structure break? So I would say the real structure break would be this level right here, because that's what led to this high. So if we break this level, we have a breaker structure. Where is it? There we go. Yeah, so if we break this level, that would be a sign to me that we are in a longer term, higher time frame, like super higher time frame, downtrend. So possible that's what happens from here. We just head lower, break this level, right? Form a new low off of that, and then come back into some level of supply and then continue that downtrend. That is kind of my base case for the longer term. That doesn't necessarily mean I think the pivot is going to happen right here, even though I think it's very possible that this is the level off of which we kind of pivot down to that lower low. But I think it's also possible that we do, I call it a Three Stooges. It's a little, not exactly the best example, but I see this all the time. So you have a high, you make a low, make a lower high, and you make another low, and then this one comes up and it goes in between the high or peak number 1 and peak number 2. So like the midway point or something comes like right there, and then you get lower. So I wouldn't be surprised if that is what we end up seeing. I'll definitely be looking out for that if this trade right here off of this supply does not work out. But that Three Stooges pattern, actually, let me pull it up. I think I have a decent example of it. Minor intermission.
Totally.
Where is it? Oh, here we go. Okay, so whoops, that's not what I wanted. So this is kind of an example. You can kind of ignore this because this is just for a specific version of it. But yeah, so you have peak 1, peak 2, right? You come up, you make a low, you make a peak 2, and then you have these successive highs. This example is a little different just because you're making lows, but there is instances like that. Here I actually have another example that's a little bit more similar to that, right? So Three Stooges, and that's kind of what you'd see right here, right? You have this low that lines up with this right here, and you make another lower low, lines up with this right here, and then the high comes in between peak 1 and peak 2, which is potentially what we end up seeing right here, right? But you can also see it with successive highs. It kind of makes like this little loop, kind of like this convex structure or shape. So you have the high, low, peak number 2, and then successive higher highs that lead to peak 3 that is right in between peak 1 and peak 2, right?
Yep.
I don't know why I put this here. Stupid. Okay. Yeah, that makes sense. So that is potentially what I would be looking at for Euro Yen. But, I mean, based off this reaction to the supply, it definitely looks like this is potentially the pivot point, right? Because we came in here, pretty strong candle. And now, I mean, obviously, who knows what's going to happen? Anything can happen. But definitely could be the area or the supply zone that really sends this down into this ultimate higher time frame downtrend. Although I suppose that's a good thing if you are short.
Yeah, baby. Yeah.
Okay, so what do we got next? Euro CAD, I think. Oh, just kidding. Psych. Euro Swiss franc. Okay, so higher time frame. Let's do the drill. All right, so clear downtrend, right? And you know what I want to map out is, just because I'm seeing this, so we got this. Whoa. So this previous range right here, right? And we broke through it. Now I would love to see price come back into this previous range, right? Actually, let me do this. I'll even incorporate that wick, right? So this previous range. Okay. Yeah, so I would love to see price come back into this previous range right here, so push up into this general area. Lines up decently well with this supply. Actually, let me be on the daily chart. Yeah, I guess you can call it right there. Yeah, so this supply area, because we have, you know, this consolidation at the range low, and then pretty large impulse. I mean, two decently large red candles, or black, I suppose, being technical, that led to this ultimate low right here. And so you can kind of see, not super crazy, but there is a little bit of imbalance. So from this level right here up until there, we have this imbalance that could need to be filled, and that lines up really well with this range low, so we could fill that level. Whoops. Get this out of here. Yeah, so a pushback into this range just to retest it, because usually when price leaves a range, at some point it returns to that range just to retest it, grab liquidity, any leftover liquidity that's left at the lower end of the range, and then it continues back to its previous range low, or even, you know, just continue the downtrend to make a lower low. But higher time frame, that's definitely what I'd be looking at for this pair. This order is probably not exactly where I would want it, if I'm being honest. I might want to move that. Let me give you a good example. or a better example. So actually, yeah, so keep the low here. So always targeting a lower low because we are in a downtrend, right? So the assumption, the base case, and for those who don't know, base case really just means 51% or more. So if you ever hear that, like analysts talking about base case, I mean, if they know what they mean, at least that's what it means.
Totally.
So base case, meaning if you had to put a gun to my head, I'd say we're probably going to make a lower low at some point. But yeah, so where do you enter? I always try to do midpoints of zones. I'd probably drop down to a lower time frame, which I'll do in a sec, just to get it more context. And then we'll make it like a 4 risk to reward. That's pretty decent. All right, so something like this. And now let's drop down. Actually, let's move this over. I know it's going to be a problem. So let's drop down and get a better look at this right here. Okay, so we can kind of tighten up the zone. I usually like to use candle bodies, but you can draw zones however you want. It really is kind of subjective. But we see how we never really came back into this, like these candle bodies. I suppose we came back into, I guess, the wick level, right? But we have these relatively equal highs, and I think there is, especially right here. I mean, you got these levels right here, where potentially a lot of retail liquidity is resting, right? People who put their stops right in that level. So I would definitely like to see price push up into this level, kind of run those potential retail stops, grab liquidity from filling this gap, this imbalance, and also capturing any leftover liquidity from this supply near the higher time frame range low. And then it looks messy. Come on. Okay. Yeah. So yeah, that's what I'd be looking at. I think that's definitely a possibility. Now you can always wait for confirmation, especially if price comes back into this level. You might want to wait to see how it reacts, because sometimes you can come in here and then you get like this crazy wick out of nowhere, and then it kind of goes back to normal. So you could play it by ear, but I think in general this isn't a terrible, especially without how much breathing room this stop has. I don't think this would be a terrible play to have just sitting in there. Not necessarily waiting for some sort of confirmation. Like, although if you did want to wait for confirmation, you could wait to see how it reacts here, and then if it pushes down and you get some meaningful candle close, like at least a 4 hour plus, 4 hour, 8 hour daily, whatever, a close below this, probably the blue line. I guess you could do the zone too, whatever you prefer. It doesn't really matter that much, I guess, but a close below, like in this level right here. So candle close outside showing weakness, and then you get it on the retest of this blue line, right? So you'd have to lower this a little bit, but you could probably tighten your stop too. So in that instance, you could, wait for price to come in to that zone, show some weakness, have a candle close. Have a candle close outside of the zone below the previous higher time frame range low, showing that it's maybe accepting that this new range is the new range and headed lower to this lower low. So that would still be a decent trade idea. You don't always get in on those retests because sometimes price just like comes out and then just so just whatever suits you, right? Whatever suits your bias. Okay, so let's transition to what we got. Second to last pair. Woo! Okay. Now this one looks pretty, I don't know how I feel about it. Especially because we busted this high. So clear downtrend, right? That's really what this isn't meant to be a trend line. I don't trade trend lines. I'm not, I'm not a retail trader. I mean, technically I am, but you know what I mean.
You're a fucking idiot.
So this is just to show that it's a downtrend, right? Just gives me a general idea, like, okay, we are in a higher time frame downtrend. That's the trend not to fight. You're looking for sells when you see stuff like that in general. Oops. Okay, come on. So I'll go ahead and get rid of that. But we have high, a low, a lower high, lower low, and then we busted this, right? So we made a new higher high. Now that could, because that's a break of structure, that definitely could mean that we are going to put in a higher low somewhere. And my area of interest would definitely be somewhere around here. Let me drop down to a lower time frame. Yeah, so anywhere in this region, I guess, actually. I think it would probably bust below this level if I had to guess, but we'll just do this pretty wide zone. And actually, So whenever you have these really big zones, another point, like a broken record, I'm gonna say it again, when you have these big zones that kind of make it complicated for your risk to reward, or just like where do you put your entry when it's such a, you know, it's such a wide range, I just take the ruler and do the midpoint. It's just a rule of thumb, very easy, very simple, kind of rules based approach. So just push that up a little bit. Invalidation below this low right here, pretty clear. And then we are targeting a new higher high. So top of this wick, and that's pretty good. 5R trade, very, very good, very worth it. You could even get yourself a little bit more breathing room. But yeah, so why am I thinking this? Just because we broke this high. Now, that doesn't necessarily mean that we aren't still in the downtrend, because sometimes you have this level, but the real liquidity level or the real high to bust is maybe this one or this one, because sometimes you see these little fake outs where it just gets like one higher high to pull liquidity, because you see we didn't even have a candle close above it, and that's really what I would want to see, because if you don't have a candle close above the previous high, it's very fair to assume that there was maybe just like a liquidity grab to bust stops and, you know, get that liquidity necessary for the momentum to carry it back down further. Now, if we see some sort of push higher and we get a candle close above this level, this high, that would be a really good sign in my mind. And then I would be looking for some sort of retracement into this level for a continuation of this new trend after having had that break of structure. Now, that said, this order is also totally in play, this one to the right, just because we didn't have that candle close above, so it definitely could just be a liquidity grab. Definitely want to see how price reacts. Let me see, let me tighten up this zone right here. Yeah, it's probably good. So I maybe base it off of this. So we're already below this zone right here, which is a good sign in terms of weakness. Now I would want to see how this reacts. What it was the 2 hour. So let's go to the 4 hour. So we got one candle close below this level right here right now, and we have another one that's showing serious weakness. So if this one also ends up closing, it just started, so it's kind of a long ways, but I guess you could even go down to the 2 hour. If this candle, which has also just kind of started, so another 2 hours, whatever. I mean, do whatever you want, but I usually like to wait for a little bit more confirmation when I'm up in the air with like the candle closes. So I'd want to see this candle close below this zone again, and then I might be looking for, one last little wick into this zone before continuing down. So you could adjust your, let me get this out of the way. So basically like this, and because you're just looking for some sort of wick, you can have a pretty tight stop with your invalidation level, your stop loss. I mean, you can do the top of the zone. And again, targeting a low, that would be one target. You could also target anywhere in this zone, just like because I talked about this potentially being the point it would transition to an uptrend. Now, I don't know if that necessarily would be the case, but you could still have that as a first target, somewhere like around there. Still decent risk to reward. You got the 3, good enough. But ultimately, you do want to be targeting the lower low. But yeah, that's what I'd be looking for. So yeah, just a quick recap before I transition to the last pair. We have a candle close below here, below this zone, and kind of signaling that we're having some serious weakness. Not a lot of buyers holding this up to continue making it to that higher high. So looking for this candle to continue and close red, continue as is and close red. Even if it gets down lower down here, don't necessarily think that you missed the trade, because sometimes you'll see it just loop back up for one last little wick, liquidity grab, and then a continuation. And that's maybe what I would be looking for if we do see some weakness. But yeah, always keep in mind how it's reacting to zones. Like you see this big wick right here, right? A lot of liquidity, a lot of buyers entered in. Didn't really have any lasting power, at least as of now. But still, maybe like watch this level to see if it reacts. I don't think it would. I think if it did end up going, continuing higher, it would probably react in somewhere in this zone. But either way, look for some close, maybe some weakness. Say it like closes down here, and then you get another maybe some chop, and then a wick up here to get that entry at one last test of the zone to grab the remaining liquidity, and then a push back down to make that lower low that's kind of consistent with this higher time frame downtrend, right? Yep. Whew, that was a lot. God damn. That's what I'm saying. All right, so final pair.
Yeah, baby.
Okay. Yeah, we got to end it on a yen pair, obviously.
Nice.
Okay, we'll go daily time frame. So this is back to the pattern we've been talking about. All, like I said earlier, the theme of this video for the most part. So we have this, it's not as clear on the daily level, but I'll just talk about it. So we have this zone right here, this impulse. We have this large impulse, left some imbalance in this general area. You could even say, yeah, actually from this wick low right there up to this wick high, we have this imbalance that hasn't been filled, and we have this ascending liquidity building. So what am I looking for? A drop to bust through these lows, capture liquidity from this demand, and then continue higher to a new higher high. Right? Okay, so let's actually get rid of that and go down to the 4 hour, maybe even go down to the 1 hour because we're crazy. So yeah, you can kind of get a better idea of it right now. So here is our demand, right? Our demand zone. So we had this big impulse. We dipped below this range, right? We dipped below this range, and then we quickly came back in, right? Pretty aggressively. And we can tighten that up right there. Okay. Yeah, so we have this consolidation and then another large impulse to make a new higher high. That's basically where we're trading at right now. And we never really retested this area, right? So we had this impulse, and then we established these lows right here that never filled this imbalance or retested this area, right? There's probably a lot of liquidity, a lot of orders left in here that, from this level all the way up to here, it was just pretty, buy, right? Not bye-bye, but buying.
And we say bye-bye.
So I wouldn't be surprised in the slightest if we do see a return to this level at some point. We come show some weakness, and then right around here we see a strong break to bust through these lows right here, capture that liquidity in this area, and then we zoom to a new high. All right. Yeah, but we've covered this kind of structure a lot now in this video. I'm not going to hammer it to death too much since we've had so many pairs talking about this, but hopefully you get an idea of this because you will see it a lot. These demand zones off of these huge impulses that establish these kind of retail lows, and then you have the weakness to bust through them, capture liquidity from both running those stops and getting any excess orders or leftover orders in that demand zone before continuing higher. All right, well, I think that is all I have for you today. But as always, stay happy, humble, and most importantly, solvent. And I'll catch you all in the next episode.
And we say bye-bye.